Hello, trendsetters, and welcome to Finding the Trend. My name is David, and this here is Mike. Everyone and their moms are talking about GameStop, GameStop, GameStop. So why is GameStop going up like a rocket? GameStop has been rocketing higher, over 100% gains per day for the last 3 days. What's going on, Mike?
Well, I mean, it went up because of a short selling and a short squeeze.
Alright, so can you explain how short selling and a short squeeze caused GameStop to rocket to the moon like this? What's going on?
So to explain how a short squeeze can impact the stock, we really actually need to understand how short selling works. And so first, you have to borrow a share from a broker and then turn around and then sell it. And you actually promise to pay it back in the future. Of course, this isn't actually free, and you hope to buy back the share in the future for lower, sort of pocketing the difference. So a short squeeze is what happens when the shorts buy back shares regardless of the price.
Thanks for that basic definition of a short squeeze. But can you elaborate a little bit more on how that plays in the current situation with GameStop? I mean, it's rocketing to a moon. I can't understand that.
Yeah, so because of the short squeeze, GameStop actually has enough demand for its stock to keep price higher, because short sellers, as I'll just refer to shorts from now on for simplicity, they got greedy and they got caught with their pants down. So they had 140% of the shares shorted, and to a lot of people this doesn't really make sense, because how can you short more than there are available shares of stock, right? Like, well, what happened was they borrowed shares to sell, and then they just kept borrowing shares until we got to the 140% share mark, and they shorted the stock to like $5 a share, hoping it'd go bankrupt. And actually, some redditors were smart enough to realize that GameStop was not going to go bankrupt, and decided, well, why not? Like, let's buy the shares and force the shorts to cover their positions. And for a while, like, the stock didn't really move, but like a snowball in motion, eventually gathers more and more momentum as time wore on, and then more people joined the cause, and eventually the stock rose to like 20, 50, 80, 150, 200, and now 320 where it closed today.
Wow, that's pretty crazy. I mean, from $20, from $5 all the way up to $320. Really, really crazy. So what happens now? Where does the stock go from here?
So, I mean, right now, actually, the short amount of shorts hasn't really changed. It's actually still 140%, and 140% of the stock will still have to be bought back by the shorts. Now, a lot of finance media has been hyping up that the stock is like super volatile and that the stock could drop at any time, and that's technically true, but in reality, like, there's a ton of demand, and the news portraying like retail investors as degenerate gamblers isn't quite true, in my opinion. I just find it ironic that a lot of people on Wall Street treat the economy as some kind of casino, and then turn around in the media then tell us that normal people are gamblers, and treating it as some kind of casino when they're on the losing end. So like, where's the real truth? Like, let's hear a brief clip of an interview from Chamath Palihapitiya.
The lack of integrity in the system is the precursor that caused GameStop to be sold short 136%, and for people to try to pile on and destroy a company in front of our eyes. That to me feels wrong. That feels pretty un-American, if you ask me. I think GameStop is a reasonable business. You don't know what it's worth. Let's be honest. Okay?
You don't think that Tesla's growth prospects?
Scott, I have my own model for the company. I'm allowed to underwrite however I want to own it. Everybody that bought that stock is also underwriting how they want to own it. And the point is, just because you're wrong doesn't mean you get to change the rules, especially when you were wrong, you got bailed out the last time. That's not fair.
So I just want to point out that what Chamath's saying is absolutely true. Like, if retail and hedge funds have access to this exact information, like, hedge funds don't exactly have an edge, and actually may be the ones holding the bag. Also, like, gambler's fallacy may be playing a part to continue the short squeeze, because new shorts are continuing to enter the market and selling their positions to the other seller until really all the companies that want to short the stock are exhausted. Before that, like a lot of Wall Street firms are willing to bet their money that the stock will go down. And so the cycle might continue for some time, like as both sides basically fight for control over the stock price. But there's no denying that at some point, like 140% of the stock will have to be bought back, which will inevitably cause the stock to rise over time, assuming like demand for the stock is otherwise constant. So we definitely haven't seen the end of the squeeze, in my opinion, because there's a large amount of short sellers that are still selling the stock even right now, just sort of delaying their inevitable buyback. And actually, I just want to play a little bit more of a clip here to sort of demonstrate what sort of tricks they're using to scare people as well.
There's no fundamental reason why they're there. They're trading because there's this momentum cohort behind it, whether it's on Reddit or Robinhood or wherever else.
But Scott, why is that all of a sudden so wrong to you, this kind of momentum trading? Because, for example, if you look under the hood on every quant strategy, organized, quantitative, strategic hedge funds on Wall Street, those things are all momentum shops. They trade day over day, massively levered, small swings. So basically what you're saying is, hey, if retail runs a momentum play to squeeze a short, that's wrong. But hey, if Renaissance Technologies and somebody else does it, that's okay. That's what you're saying. You may not know that that's what you're saying, but that's what you're saying. And to me, that feels very unfair.
No. What I'm saying is someone's going to get screwed. Okay, someone's going to get screwed, and it's going to be it's going to be a retail investor who gets screwed.
So yeah, I mean, obviously, what happened there was like there's a lot of retail investors that are unfairly being portrayed by the CNBC and a lot of mainstream news outlets as being gamblers, and when in reality they might be very smart people, you know, with access to exactly the same information as a professional investor. And actually, Wall Street also appears to be doing something else kind of smarmy, which is playing something called a short ladder attack. I just found this really interesting because, yeah, what happens is basically the short seller sells to short seller. So short seller A sells to short seller B, which turns around to sell the short seller A at a lower price, and with a small amount of capital, you can wreck the momentum of the stock. So essentially that's what's happening here in this little bit. And then you make people think others are dumping the stock. And actually this happened on Friday, happened again on Monday, and it's possible it might keep happening just to discourage people from investing. This won't prevent the shorts from being called on margin. If you're interested, actually, Ars Technica has a fascinating article about this situation as well, which I'll also link down in the description.
Thanks, Mike. That's a lot of great information. We'll make sure to leave all those references in the description down below. We hope you guys find this video informative. If you do, make sure to share it with a friend, and also like and subscribe for more videos just like this one. So guys, what do you think about GameStop now? Do you think it's going to go up, or do you think it's going to go down? Let us know in the comments below. We read and reply to every comment. Well, that about wraps up for today in this video. We hope you guys stay healthy, we hope you guys stay safe, and keep following that trend. And of course, we'll see you guys next time.